Spotify is a Swedish audio streaming and media services provider founded on 23rd April 2006 by Daniel Ek and Martin Lorentzon. It's the world's largest music streaming service provider with over 365 million monthly active users. Today we're gonna discuss over pros and cons of investing in Spotify. Stay tuned! For the first advantage, in order to consider Spotify as a good buy, is just newly rolled out paid tier called Spotify Plus that's still in testing mode. So within this upgrade, ad-supported users would get the ability to skip as many songs as they want in an hour. There are people who are wary of paying $10 a month to use Spotify ad free, but won't think twice about paying $1 a month to have unlimited skips. These users will start generating $1 a month more for Spotify while still generating ad revenue. Another aspect that also brings positivity into its future growth valuation is continuous innovation, and we are considering Spotify Audience Network for podcast advertisers, giving them the ability to more effectively target podcast listeners and hopefully helping to increase monetization in podcasts. Another important factor is aggressive international push. In late 2020, Spotify launched in South Korea, the world's 6th largest music market. And another one, consistent margin builds. A business like Spotify rests largely on scale. Its largest expense is paying artists for the content, a cost that trims down over time to more users sign up for Spotify Premium. And last but not least is work from anywhere. Spotify recently announced a remote work option for all of its employees globally. In terms of some data, investors zoomed in more on the perceived weaknesses around total MAU ads. So total MAUs increased 22% year over year to 665 million, whereas in Q1 the company had guided to hitting 366 to 373 million MAUs in the quarter. There is also worth noting that premium subscribers of 165 million in Q2 grew 20% year over year and came in well at the high end of the 162 million guidance range. Spotify's gross margins expanded meaningfully to 28.4%, up 300 points. 2 points of this increase were due to accounting accrual related releases. Also, we need to bear in mind that the global music streaming market is forecasted to grow at 16% until 2023, but there are also competitors that don't miss the opportunity to jump in. On the other hand, Spotify still needs exclusivity. What has proven to differentiate Spotify from its competitors is their platform app, their recommendations and the daily mix. Also, the platform is easy to use with friends and you can use it in many devices. So let's broach right now some disadvantages in terms of regarding Spotify as a possible investment. So Spotify's right now fundamentals have improved, but the company has yet to turn a profit. So years go by and no profit in sight. Right now Spotify has noted about 24 million bucks net loss and about minus 0.24 earnings per share in Q2. Competitors such as YouTube Music or Amazon Music, who have all the cash in the world, are becoming serious threats as they can afford to operate at a loss, but Spotify doubtedly. Spotify's market share is right now at 32%, Apple Music 16%, Amazon Music 13%. So Spotify recently lost 2 points of market share over the period because its percentage growth rate trailed that of its leading competitors. So regarding investors and analysts' perception, there is that user growth weakness in Q2 will be quelled finally by better results in Q3. Revenue margin trends continue to hold up strong, and new offerings like Spotify Plus grant additional monetization opportunities. But in order to achieve it, we need those segments to improve significantly. Long-term user base, better advertising, podcast as serious sources of revenue, exclusive content. And with this excellent execution, we may see an excellent returns to investors in the following years to come. Okay, so you've just got a viewpoint on where Spotify might be heading in the future regarding its fundamental analysis. Right now, let's look at this technical chart and let's find out where might be a good opportunity to have our entrance in terms of trade or investment idea. Okay, so since February of 2021 we are right now turning to a downtrend, but those lows of a downtrend are not getting much far from each other, and this maze low was formed and just has reached the lowest point of $210, and this exactly of recent in August has reached just a psychologically important border of $200. So it means that this bearish side on Spotify is getting weaker. In terms of RSI chart, we can find that we are right now struggling with getting our stock bulls to return, as we have leveled this 50 points area on this indicator. Right now this bearish side is getting weaker, and probably we would have a consolidation of a price in the nearest future, as this RSI is getting more and more undecided. So without cross beyond 50 points on the RSI chart, we wouldn't have see any major bull move to the upside, and right now we are just hanging on for this price movement to set whether it will bounce from 200 level again and just form a double bottom, and maybe from then move higher, or just maybe maintain the price will maintain within this territory, and maybe try to make a another attempt to get lower. So in order to consider Spotify Technologies as a possible investment, I would hang on for the price pattern to form something like double bottom, and with bulls turning up around $200 again. Without this, I would just stay aside and just wait for the price movement to tell me that it's a good opportunity to buy. Right now, with this bounce above the $200, I find the possibility of this trade, any single trade, whether it's to the upside or to the downside, as quite risky right now.